All right, good morning, everybody. How's it going? We have to talk about VIX seasonality. That's the big thing right now. While VIX is not dirt cheap, it is definitely at the low end of what is potentially possible based on the seasonality, looking at the last 20 years and kind of what we have right now. I'll pull it up and show it to you here in just a minute, but you know, it's one of those things. Usually we get a dip right at the beginning of the year, a little optimism. See that in VIX, and then the reality of a new year sets in. And I guess that's the best way I could describe it. So pulling this over and showing it here. Here's what we got. We're kind of in this dip right in here. We could see a little further pullback, but look at this mountain. And be like, well, COVID's in there. Yeah, COVID's in there. But what's this one? That's not COVID. This one right here, fellow guru friend of mine calls it the February SS. S being for excrement and the other S being for show. So the February SS. Typically see that, but then we come back to, we get a little pop late January into February. This is averaged over 20 years, so it's not just inauguration years, not just change of the guard, whatever. Something to consider. Maybe could be wise to buy some March VIX contracts. You tell me. Could be. All right. This is historically last 20 years. I mean, look at that, 30% volatility increase. While that's not drastic, this is just a 30%. So if you're going from -5, though, it's about 35% to the peak. Coming into February, 10, 15%, swing. You look at the negative to the positive, that could be like a 15% swing. And it's all based on 0 at the beginning of the year. So wherever the start point is, we usually get a little dip and then we get a pop. So how does that relate to an actual chart? We'll go over it here in just a second. Now, before I get into that, we should hit this. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here is intended to be informational, educational, fun, and hopefully entertaining. All right, hopefully that's why you're here. Getting entertained. You love the stock market as much as I do. And it's not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, VIX. All right, I'm not recommending you do anything. I don't recommend you buy or sell any financial instrument at all. There's a substantial risk of loss involved in all trading. If you want somebody to tell you what to do, somebody to give you a recommendation on what you should do with your portfolio and your situation, we're all different. We've all got different stuff. I can't give advice to everybody based on their financial situation. So you need to hire somebody that's called a financial advisor. They can look at what you got and tell you what to do if you just need that kind of help. Now, the best thing I recommend is just learn how to do this stuff. Learn how to manage your own money, because nobody cares about your money more than you. I'll guarantee it. Today, we have an interesting day. Interesting indeed. The market has a setup for a big down, and it just happens that we're getting the FOMC minutes on that same day. That's an interesting setup right here. Interesting setup. I have to say it's an interesting setup. Tomorrow, the market will be closed, so don't think you can do anything tomorrow. The general market will be closed. I'll be doing a crypto special right here, same bat time, same bat channel, 9:15 tomorrow. So you come hang out with me. We'll go through crypto more in depth than we normally do. Look at all these Fed members speaking, though. Holy bananas. Wow. Even though day of observance for President Carter, that's a lot of FOMC members out there beating the drum, speaking. And then on Friday, we open back up. We get the unemployment rate, the non-farm employment change, the jobs, monthly jobs report. And then we get some consumer sentiment and more of this inflation that supposedly made us drop yesterday. I don't know. You tell me. Inflation coming in a little spicy. I've been talking about it for a while. It's acyclical inflation coming back pretty strong. We're seeing oil prices creep higher. That causes more inflation. I mean, this is like a self-fulfilling thing here. They're going to probably have to raise rates. The market coming into the reality that they're not going to cut rates. The odds of cutting rates before July dropped out the basement yesterday, and with it, the market flushed and continued to flush. Welcome to the show. Welcome to the show. So, what does that mean for us trading? Well, let's dive into some charts. Let's check it out. Let's see what the environment is. Starting here on ES is kind of the main, if you're not familiar with what ES is the S&P 500 futures, all right? These things trade pretty much 23/6. 6 days a week they're open. 23 hours a day they're open. I guess, technically there's 48 hours to close because they close late Friday and open later in Sunday afternoon, evening. But for the most part, they're open 6 days a week, pretty much all the time. Saturday is the only day we don't get any data at all. And this returned right to the bottom of the support box. Look at that, almost to the tick. You think I might know how to do this. You think I might do this for a living. You think I might play a financial person, entertainer on YouTube. I mean, come on. Golly, look at that. Sometimes I scare myself with how accurate I get these. Look at that. Right there to the tick. This is resistance at this point, right up here. Right in there. We may rally back up. If and when we break down below this level, we're going to test this. And if that doesn't hold, we're going, more than likely, the place we're going is the daily roadmap line. I will not be surprised one little bit, if at 2 p.m. when those minutes come out, we do something like that. And take that candle, put it right back over here, and it's going to put us right down in there. Check it out. Check it out. Look at this. That high, that low. Grab that candle, put it right over here where we are. Look at that. Look at that right there. Right in the vicinity. Not going to surprise me one darn bit. That was FOMC meeting. Is this going to be the FOMC notes? Meeting minute notes? You tell me. I left my can sitting off the desk here. Wow. Can't make this stuff up. Can't make this stuff up. I mean, look. For those of you that couldn't believe we would do a market flush when we were working on the Trump bump over here, for those of you that couldn't believe we might do a market flush into the inauguration, I put the line on the chart. Sometimes I get lucky. Be careful out there today. We might experience that big flush. Now, if we get that, if that happens today, tomorrow, this week, probably not likely to happen tomorrow since the market's mostly closed, but futures will be open a little bit. If we get that, we got to hold it. All right. If we come down here, there's the possibility we get a little overexcited, poke a little bit deeper, kind of like we did over here. Got a little overexcited, poked a little bit deeper. All right. Happened in August. Roll back. It was a long way. Got a little extra overexcited down here. Took a little extra long to find the bottom. Got a little overexcited, popped up, got a little overexcited. So this can happen again right here. And you see how popped up, down, then we got a little retrace, and then final down. We might see, so we might get a little reprieve, a few days, suck in a few people, and then do a final flush into that inauguration time period there. That could happen. We haven't done one like that since back here in 23, so it's been over a year since we did a nice big flush out like that, getting a little deeper than the roadmap line. We could easily see that come down in this zone right here around 55.40, and that could last us, we could see this flush down today, we get a little reprieve, and then we flush on down into the inauguration, and then we set up the potential positive. Now, potential. We're going to have to watch out for this. Like if we get down in this zone anywhere in here, we're going to have to watch the 618 level when we have the high in place. That's right there. When we get the low in place, we can run the fib line from the high to the low, find the 618, which is probably going to be somewhere in this neighborhood at this point. If we come up and bounce down off of that, we're setting up for a bigger correction. And it's going to last probably the rest of the year, if not for the next several years. Bummer. Watch out. If we can break through that, we're probably going to make new all-time highs. The rally might last well into May, June, July, August, September, possibly as late as October. Probably get up into this level, 65, 66 on S&P 500. Then the party's probably going to be getting stale. That would line up with crypto summer and its ideal target, somewhere in late summer, early fall, mid-fall, somewhere in there. These things kind of coming together. It's kind of weird. I've talked about this for years, but we're staring down just months away. I've talked about how all this is going to come together. And, did I have a crystal clear picture years ago? No. This is kind of all coalesced. And as more and more pieces keep falling into place, the picture and the path gets better and better. All right. This is the operative path. If we're going to do something different, we're going to break above that downtrend of highs, which so far is holding really tightly. This box right here, where does it come from? Run from that low up to that high, and you can see the 618 level with these other touches down here, and that touch. I mean, it's been a support level all the way back over here. Like this has been a tough area. We had trouble getting up through it. We had trouble getting bouncing off of it. So this is an important support level, but we may just muddy it up, just dip right through it. So be careful. Be careful. That's the operative path, all right? If you're super long, be careful. This thing has the potential. To flush on down. Now, how does that relate to our buddy VIX here? So we started out the year with a little pop. We get that little dip. Now we're getting a little more pop. It's never exactly the same, all right? 20-year average is just an average. There's outperformance years. There's underperformance years. I drew this on the chart. We caught that one a few weeks ago. Now it's time to potentially catch this one. This one might go a little higher. Now remember that 15%, right? So 15% is not a ton. We're only talking about a move up into this zone right there, 21. But if we got the 30%, 35 maybe, swing from the negative to the positive, could see that. If we got an outperformance year, could be up 66%, 90%. And we may just see it briefly, pop up in there, and drop back. All right. Now, ways you could take advantage of that. You could buy some shares of this one. All right. This thing probably pop up to the roadmap line at the minimum, 25, 26. We got really spicy, some up around 30. If you just bought shares, that's a 50% gain, roughly 40%, I guess. If we got up in the zone Not too shabby. Just on shares, 40% gain. Probably only going to hold a few days. If this ramps up again, maybe it's today. Get out later today. That one right there. We got a little extra the next day. This doesn't last long though, so we took it right back down. They never last long, so be careful. SVXY. Another way to play. This one's probably going on a dip, and then it'll rally after the dip, after we find the top. This is an inverse for VIX. Could you play VXX? Sure. Probably not going to move huge. Going to go from 47 possibly up to 50, maybe 58. That's a much smaller 25% potential. Would I play options on this? Heck no. This thing is a dumpster fire, a declining asset. I probably wouldn't play options on this one either, unless you're just really looking for the rolling the dice. Now you could get lucky and play it. I mean, could you buy some for today and tomorrow? Sure. I mean, tomorrow the market's closed, so be careful. But yeah, you can let me know in the chat what you think about those ideas. Let's see. Is a high VIX good or bad? Were you long or short? As the market drops, volatility will increase. It's funny, VIX, positive volatility doesn't make VIX spike, but negative volatility, the market dropping, does cause VIX to spike. It's supposedly a ratio of calls to puts. I mean, puts to calls in the S&P 500. So when the market's dropping, people buy a lot of puts. The normal kind of standard way that the market operates, you sell calls against your position, covered call. You buy puts for downside protection. That's just the naive condition in the market. And then if you look at the pricing, that's why prices are the way they are. That's why there's a put skew, because the naive condition is selling calls. That's why there's usually less premium available in calls. Just general broad statement across the entire market. And buy puts to protect the downside. And that's why there's generally more premium available in the put side. Now, any given ticker, there may be tons of people selling those options to try to generate income versus buying those options on the put side, or vice versa, buying calls to try to take advantage of a pop instead of selling those calls as a covered call. So the dynamics of any particular ticker could be different, and that's why you got to check out. Like, it's not just that's why it's called the naive condition. You don't know more information about the particular ticker. So that affects all the different things I do, and it plays into how I find some of the income trades I look for. If you ever wondered, it gets pretty nerdy pretty quick. And where did I learn all this stuff? Years of research, and I took a full options course at Options Animal, but they didn't teach me all this stuff. It's been years of collecting information along the way. Some empirical data, me just learning how it works. That's what empirical means. You tested it out with real money and learn the lesson. Touch the hot stove enough times, you learn it's hot. Make money doing something often enough. So there's VIX. Are we going to get this kind of spike? It's possible. And that was just August right there. Not like that was 2020 or anything like that. That was one of the biggest spikes we've ever had that wasn't part of a major market meltdown like we had in 2020. It's pretty crazy right there. I don't expect another giant spike. I mean, we're usually like a year in between giant spikes. But we went a few years between COVID and this one. So we could get another one pretty quick, but I'd expect it to not happen immediately. Might just get a smaller spike. I mean, we often spike into this lower area right here. Look back at the history of VIX. We often spike into the 30s and 40s. A big epic, 50, 60, 70, 80 spike is more rare. and it'll be fleeting. It never lasts very long. Even COVID didn't last very long. I mean, look, ramp, and then bled it right back down. That's what causes UVXY and VXX to bleed off, is the fact that VIX never trends. It always comes back. So this one on the long term, dumpster fire. VXX, long term, dumpster fire. SVXY, short VIX, tends to rise over time, but when we get a volatility event, you see like in COVID over here, it gets absolutely wrecked. And it hasn't really recovered from the volatility event in August either. We're not back at all-time highs here. So I got a little bit bigger liquidation event than it's been able to recover. It'll eventually start growing again, but if we get another big liquidation event, though, this could come down, make a new lower low. And at this point, just using the charting magic here, that high, that low, this retrace to the 618. Look where this puts us potentially. Oh, I already had it drawn down there. Imagine that. Imagine that. That puts us right down in here as a potential low on SVXY. Right down in there. It's kind of funny. Sometimes the derivatives help point how the underlying is going to react, which that would be a spike on VIX and SVXY would be a drop. So if you found that interesting, beneficial, you can play options directly on VIX if you want to. Usually the front week and front month options respond. If we get a spike now and you're out in March with your position, it might not react hardly at all. You may be like, what the heck? It's very difficult unless you're playing exactly right on the right time frame for VIX. It's just kind of the way the VIX term structure works. They don't even let you look at the options on VIX. So let's see if we can look at, oh, hit the wrong button. Hit the wrong button. Let's see if we can look at the VIX. And they don't have, can't even look at the VIX options on the futures either. See the forward curve, the market's expecting a little more volatility. 20 is about the resting heartbeat. When you look at this thing over the long term, we're sitting just under that. And when you really zoom out and look at this, right around 20. That's kind of the midpoint of this whole chart. Pull it right down. You see that's kind of about half the stuff above it, half the stuff below it. Forward curve is positive, so be interesting. Let's see if we get the spike. That's the seasonality for you. You can let me know in the chat or give me some feedback. Did you find this beneficial? Are you glad I talked about it today? Let me know what you're thinking. Do appreciate the feedback. All right. So high VIX just indicates that we're probably pulling back. I mean, that the market's probably in a pullback, and it's probably going to be fleeting, like I said. So this one right here, already pushing below that support. Uh-oh. We may go down here. That's NASDAQ for you, NASDAQ futures. Now, S&P 500 futures, or S&P 500 cash index, we might get to drop to the roadmap line when it loads. There it is. Pushing the bottom of the box. Been talking about that for a few weeks now. It's potential. And now we're staring down the potential for this to actually play out in the next few days, a couple weeks. We'll see. Could take a little, could go fast, could take a little while. We could go directly there. We could dip down here, make another correction, and then do that. So that's a possibility too. There's no crystal clear path. I'm just giving you my best kind of estimate on how I think this is going to unfold. Now, these are interesting. These have been firing off left and right. I mentioned we probably get a little pop in here before we could drop some more. Well, that's exactly what happened. We've kind of popped up in here, and now we've set up the ability to drop again on stocks above their 20-day average. S5FI. This one keeps firing off alerts and alerts for me. We got down to 14-ish. Usually when we're grinding the bottom, we make a nice big spike down below 10 and signal the bottom. So we don't typically hang out here a long time, but when we're grinding and grinding, we ground over here, we spiked up briefly, and then right down, got that spike down in under 10. So that August flush back over here didn't really take us down. Like, even though it was pretty bad on a lot of charts, a lot of things, it wasn't very widespread as far as participation. This correction right now, pretty widespread, and this may take S&P 500 stocks down to 90% of them below their 50-day moving average. And that'd be a good point to spark off the next rally. Been talking about how we're coming down here for, gosh, all of last year. And now here we are. Here we are. Probably going to flush it out just a little bit more. That'll probably mark a bottom. Then we'll probably rally back up. S5TH. This kind of fits more in line. The way stocks above their 50-day, this fits more in line with that longer term rally. I don't think we're going to just spike it out right now and be done. So S5TW, that's stocks above their 20-day. That's where I started. We spent a long time down here, and now we're spiked up. This could go just a little higher, but it's probably going to flush on down. Again, get that lower spike down near the bottom of this baby. This one can come all the way down to, I don't think it ever touches 0. Maybe it does. Let's see. I don't know how you get 0.22%, but yeah. I guess with 500 stocks, you get a couple that hang out. I've never seen it when the entirety of the S&P 500 stocks are below their 20-day. So down here represents very few stocks above, this is looking at stocks above their 20-day. So when you're down to like 0, that means 99.9% of them are below their 20-day moving average. We don't typically hang out down there very long. And I've got it on a log scale, so it's all skewed. But it's really just a market oscillator. We just oscillate between the top and the bottom. That's the way the market works. Money flows in, money flows out. Money flows in, money flows out. Money flows in, money flows out. It's just a big money flow. And people ask me all the time, how do you trade these? You don't. Like, this is just keeping track of the moving averages. It'd be great if we could trade them, but that's just not reality here. This one's still hanging out right here. Holding up really well right at the 50%. This is stocks above their 200-day moving average. We got about half the S&P 500 stocks above, half below. It's actually 52 above and 48 below. This could go a little lower. We've retested this trend line a few times. Not much, but a few times. It's from the low back here, this low right here in October. Remember, I was talking about that bigger correction on October 23? Right there. Could retest it again right here. And if we start getting below that, it's an indication we're going on down for a bigger liquidation flush out in the market. So these are just indications where we're at, big picture. What can you expect? Thought we were topping out. Now we're getting a kind of a liquidation event. Now, it's kind of funny though, this liquidation is not that big so far. We're seeing the participation plummet. Lots of stuff bleeding out, but so far this correction is just a little baby. Not really done anything. Not really done much of anything. So be careful. This can develop into something bigger, more sinister. Then we'll probably see this bounce, and then we'll set up a bigger down later in the year. It's what I think is going to happen. All right. So we've already talked about NASDAQ. Russell is just kind of sitting here on the roadmap line. Support down here around 2,100, 2,100. If we start getting below that support level that we've had for the last month or so, probably going to flush on down in this zone right down in here. Not trading. I traded the breakdown here. I knew we were going to the roadmap line. This, not sure. All right, not sure what we're going to do. I think there's an R5. Let's see. Can't remember what the... I think there was a Russell, but I'm not sure. Oh, there's an NDFI, not NASDAQ stocks. And there we are. R2FI. See, this is already hanging. This hasn't poked below. Interesting. It's just kind of consolidating down here. Hasn't really poked below like we usually see. So this may have, like I was talking about, this may indicate there's more downside to go before we get down here. And obviously, I've pulled up this chart before because I have the levels marked. Just couldn't remember what it was. I bet it's on the red list. Somewhere down here. Yep, right there it is. We've got the S5FI, NDFI, R2FI. So NASDAQ still holding up pretty well too. When we get down there, that's an indication. Reversal land. These 20, we typically stay in between the 20 and 80, but a reversal is imminent when we get down to 10 or above 90. Below 10, above 90. All right. It's just one of those things, another tool in my toolbox to help keep track of where, I commonly keep like this pro and con list, for lack of a better description. It's like, maybe you call it a bullish bearish list in my head. Like, what are the bullish potentials? What are the bearish potentials? And it kind of skews my view in the short term and in the long term. Like, I keep a long term one and a short term one. It's like short term, bull bear, which way am I slanted? Then longer term, bull bear, which way am I slanted? So when you look through these, you got short term, you got shorter term, very short term, 20-day, short term, 50-day, and longer term, 200-day. You just kind of stack these all up in your head. Which way might the market go? So that's why I look at those. And it's not like an everyday, I don't even look at them probably a couple times a week. Sitting here and can go lower. That's the bottom line there. Now, oil, I'm not sure that was a back test. We may rally. We could push it right up here and then back test. That would be a much better back test of the roadmap line. And then when we break out higher, it's probably going on up to 80, 90, 100, 105 maybe. 105 will be that big 618 test for the whole big correction that we did off this high from back here in 22. And that will put the screws to some inflation. If we get a breakout that rallies up like that, that'll be testing some inflation numbers right there. And where we go from there, not sure. We could retrace and pop higher. Those higher targets, I've had them on the chart for a long, long time. We've got this 109, 120, 140, 150, 170. Those are some big upside potential targets if things are going to get spicy. And we may stop just right there at 120 and turn down. So there's potential to go higher. We still got to work through it. I'm not really trading it yet because it's still sitting here with lower highs and in the funk. Hasn't really, it's made the first couple indications we're going to go higher, but hasn't proved it yet. Got to break above that downtrend of highs. Got to break above that prior high from just back here in October. Break above that stuff, we could see higher prices. But if we glance down off of it, we can go down here. This is probably the #1 driver of inflation, so be careful on that one. Gold. Wow, this one's going to get me into a gold rush trade this week, isn't it? Right into that resistance zone. Very cautious here. Resistance zone right there. Although if the market flushes, we could see this kick in as protection. It kind of went down back here. Let's see, where was August? I don't remember anymore. Back here, we flushed with, gold flushed with the market, but it quickly turned around and ran. So we can see this briefly flush if the market flushes today, but then turn around very quickly. I would like to see it make one more lower low because this all looks very corrective and choppy. I'd like to see it pop on down. Something like that. Make a bottom and then break out, back test, and get going. Really like to see that. Bitcoin has me all but convinced we're going down to the area down here. I went ahead and liquidated off my aggressive leverage positions yesterday after we broke down below that low. Just like I said I would, and probably going to do that. Down in the zones where I'm going to pick it back up right there. Thanks, Robert. Thanks for becoming a channel member. Do appreciate all my channel members. And Ethereum has the same kind of potential setup. Target for Ethereum somewhere down here around 27. Right down in here. Looks like where we're going to be heading. Dollar. Rally back up to highs, huh? Retest the highs. This one has resistance all the way up to the top of this box. We could come up and retest that 110, almost a 111 area right up there. That's potential. I drew that on there, gosh, 2 years ago, looks like. I drew this up here. Still an operative resistance and can still result in the big down that goes down to the mid-90s. It's just been a long term. This correction is just going to take a long time. Big picture. And you can say, well, the higher dollar, it's this, that, and the other. It's correlated when it's correlated. It's not when it's not. Watching this for global liquidity yesterday was really spicy, but got slammed back down. And global liquidity is not really indicating anything, at least on this. Now, if you look at central bank liquidity, it's kind of been dropping off a little bit. So we may see a bigger flush out, and this could go down for another leg. This is what's got me concerned here. This could easily flush for a bigger downside. This initial drop, this retrace that just hasn't been able to get through that level. Right here, we could see another liquidation event in the Nike. Could take us right down in here underneath that low. Another big, that'd just be a repeat of that move right there from August. Could repeat itself right over here. Could go faster even. Why? Who cares why? It's just possible. It's set up in the chart that it can do it. Back to that VIX might be a smart idea to keep some of that around, some sort of exposure to that. Just saying. Liquidated on spikes, get back in on dips. All right, I go to the pre-market, pull everything moving $2 or more up, put it on the gainers list, $2 or more down, put it on the decliners list, and at the very end, I have a bonus trade. If you want to stick around to the end, I'll share the details with what that might entail. MTN, Mountain Vale Resorts, is under the roadmap line here. It went a little deeper than, let's see, let's put it back on the log scale. And it went a little deeper than I hoped it would go. Just kind of keeping an eye on this one. Now, this could is the operative word here, could be a measured bounce. It has nothing to do with the roadmap line. I follow two patterns. Roadmap pattern, and if you want to know about the roadmap line, the roadmap pattern, go to the channel homepage. I've got a whole video on it, or links in the description. $5. You can get the indicator. You can get all the training, all the weekly watch list, all the things. The other pattern I teach during the fib class, we look for a reversal. And this low right here was a downtrend into it right here back in 2020. Then we popped up. We made a high right here. And then we've done a slow bleed out, and we came down to a 618. When you run the fib line from the low here to the high here, that 618 level came in right here. Now, when I say we went a little deeper than I'd like to see, I don't really, my most ideal, I like it to just touch that zone within a point or two, not really push it on down near the 786 level. So I like to see that hold ideally right there. But, you know, anywhere in this vicinity is fine. Anywhere between the blue lines is fine. It's just not ideal. All right. Now, the result of that, you know, that's running the 2-point tool. Now, how you get a target off of that, you take the 3-point tool, you run it from the low to the high, back to the lowest low here on this correction, and that gives you your minimum target right up here. Then a kind of spicier target, and then if things are going to really get, you know, really move in the trend the other direction, you're going to hit this target right there. So those are the 3 operative levels here. If it can start breaking higher, push above the roadmap line, get above the 618, and make some advancement higher. So this has a nice potential, but it's just not doing it yet. So this kind of combines all the different things. You know, we're sitting right at the daily roadmap line. We'll be looking at higher picture, bigger picture roadmap lines like 3-day, possibly the week. Jump up to the weekly. It's going to be sitting up here. That'll be resistance, and this will be a big picture trade. Potential expansion. You can see this thing was rocking and rolling over here. 3-wave correction, first move, retrace. This sets up the next move, the retrace, and then a bigger move right there. If we're getting continuation in the trend, and this will be like years out, like years and years. All right, this trade will last for a long time. But it's got to quit messing around here and get going. That 180 could be like 1200. That'd be a big upside. But it might take into the 2030s to do it. But it could fail. Like this could break down below the 786 and go lower than this low back here and just completely wreck the pattern. So don't put all your money into one trade. That's why you take calculated risks. All right. LFVN, Life Vantage Corporation. That sounds like pharmaceutical. Yep. Pharmaceutical. Let's look at that. Look at that. Look at that nasty chart. Oh my gosh. It's just a big watermelon seed squeeze. I wouldn't touch it. Pharmaceutical, biotech stuff, just not for me. I don't find it worth it to trade it. Too much risk for me. Plenty of other stuff, plenty of other opportunity. Autodesk looks like we're coming back down to the daily roadmap line here. The bigger picture charts. We're set up to rock and roll up here, probably the 400 area. Out here, 26, 27, maybe later this year, maybe next year, maybe the year after, somewhere on this weekly chart, we're probably going to push on higher. But right now, on the just the smaller local time frame, probably going to hit the roadmap line right there. All right, VIR. Another biotech. Just stay away from that stuff. Carvana getting a little bounce. If we can break back above that 226 area, we may be able to extend it on up to 281, 296. I'd be concerned. The Hindenburg doesn't usually put out reports unless there's basis for it. I've said for a long time that this company was a dumpster fire of a company. The chart, well, keeps proving me wrong that we're going higher, but that's a lower high at this point. Could easily go lower low, that high, that low, that high. That puts it down basically in the zero area down there. Be careful. I did buy a put on this. Bought out to, I think I bought to 2027. Bought a put somewhere. I don't even remember where. I just bought a put just to see. It was expensive, but I kind of want to see. SANA, Santa Biotech, another biotech. Just stay away from biotech stuff. Golly, you even got a stamp for it. Just be careful. That's a low price too. Be careful. eBay. Dang. Well, there's the target. That was the bounce. Took a little while to work out, but boom, right to the target. Could go for a bigger target, but I'll be hornswoggled. I'll be hornswoggled. That was beautiful. Beautiful. Anybody take that one? I didn't take it, but I think that was a bonus trade set up from weeks back. Team probably coming back down to the roadmap line. BSX, Boston Scientific, medical specialty stuff. That's a pop. Maybe rallying on up. It's hard to say. At this point, the last big correction, kind of playing that move out. And be careful. This is probably due for another big pullback, and it's known for giant pullbacks. So I'd be careful on that one. NVO. Can this one wrap this correction up? That's the big question. Probably got a little bit further down to go, and if we break down below this area right around 75, we may dip down into the 50 area. Let's see how. Oops. L. Keep hitting I. The main competitor of NVO, just kind of hovering, consolidating. Seems we're a little out of favor on these drugs for a little bit. These are GLP-1 plays, NVO and LLY. And then HIMS got put out of the GLP-1 drug business, but doesn't seem to be destroying their chart too much. Nice pullback. That may hit the roadmap line. That high, that low. If we're going to push on higher than 30, we could go up to 36 and 38. Twilio. And that's finding some major resistance there. Major resistance. Next big major resistance up is up here around 180, but this can easily come back, retest this resistant, what is now support. Come back there before we do that. That would be, if we did this, that would be an ideal spot to add some risk for going up there. In fact, why don't I put my money where put my alert where my mouth is? See if we can get down to that vicinity on Twilio. Yang, just chopping around. Even though these are on the gainers list, this stuff is looking nasty today. That's another indication of how the day might go when you got a bunch of crap on the bullish list. Be careful. It's like another warning. Anytime it's dominated by biotechs, it tells you something about the market. Something's up. When the most shorted names and the crap comes to the top, be careful. Boyle is an ultra long natural gas. Natural gas was popping a little bit this morning. We can see this retest the roadmap line, but this looks like it's going to go lower low over the coming months. That's just the way it normally works. The opposite of this one is on the list down at the biggest losers. Down here, it's chopping around. But really, you just want to go to the underlying, which is natural gas, and look at what's going on. We hit the target that I've talked about for 2 years, it feels like. So retrace back to the roadmap line would be totally expected in order, although we may just come down to that prior high, and it may take until that all comes together over here for us to get there. So it could be out in March before we get down there. So what's that going to do? It's going to push cold higher. Cold just naturally goes higher because all the things I said about VIX not really trending. Same thing comes into play on natural gas. Like natural gas doesn't trend. When we zoom out and look at it, big picture, it just kind of rests in this general $3 area. So when we're up to 4, probably come back down. When we were up to 10, it was definitely coming back down. You know, when we get spikes, we tend to come back down. So look at that long-term kind of flip point on the chart. $3 is about, you know, it's like when I was talking about 20 on VIX, $3 is about where natural gas tends to come back. We're not really running out of natural gas. It's very easy to find more. Lots of it comes on the market. It's relatively easy to get it on the market. So be careful out there. Careful chasing natural gas. It sucked a lot of people in long. I think it's about to rip some people as we drop back down. You know, we could get a little overexcited down to 250. So careful out there. Back to Boyle. NVDU. That back tested the breakdown. I'm just pointing this out here. This got really choppy. It did not make a higher high as NVIDIA. You know, this is supposed to be 2x leverage long on NVIDIA. As NVIDIA made higher highs in the last couple, it made higher highs here, and it made higher highs here, or at least tied the high. And this is underperforming. This broke down below this uptrend of lows. Broke down here. Back tested it right there. Now pushing lower. This is a big red caution flag. If you are in this, it may be setting up to head down here. 41. Be careful. Be careful. Be careful. Be careful. NVIDIA rejecting the breakout higher pretty strongly. Probably coming down to the roadmap line. If we get below the roadmap line, watch out, baby. Cart. Maple Bear looks like it wants to come back to the roadmap line. Doesn't really have a long-term history here. That's 3 waves up. I would caution. Didn't even get to the... Yeah, this could go a little bit higher if it stops right there. If it rallies and stops right there, it may come all the way back down to the bottom. ANGO. It's up to that gap resistance there. It's a medical specialty. Why don't I like biotech and medical specialty? It's because the FDA can just come out and say, hey, we put you out of business, or hey, we approve your drug, and you know, you can go sell it for billions of dollars, like BNTX. Yeah, it's like, hey, we give you an emergency approval, and this just shoots off to the moon, and then, oh, guess what? Nobody wants to take your shots anymore, and right back down. Same with Moderna. Get the same kind of thing. This is the bubble pattern. Hey, surprise emergency approval. Then we get up here and chop, and then we drop back down. And this is probably coming back down. So I don't like biotechs and medical specialties for that very key reason. MSTR, I still think we're coming back down to the roadmap line. If Bitcoin and everything flushes, this is coming right down with it. Then we can find supports and potentially go higher again. FLUT, Flutter Entertainment. If you didn't see the report this morning, they reported they're going to have like a $350 million loss because it was a good season for expected teams to win. There weren't very many surprises in the NFL season, so a lot of people won because they bet on the favorites, and this is probably coming back down to the breakout level / the roadmap line. Right there. DATS. Dat chat. I have no idea what the heck this is. It looks like a dumpster fire. Just stay away. GEV. And it looks strong. Be careful, you might get your money ripped. Might get your money ripped. If you haven't seen anything I've said before about NVIDIA, it does 70-80% drawdowns pretty often in its history. So it has nothing to do with how spicy AI is. And what's funny, what's his name? Jensen put out a chart. This long-term outlook. Let me see if I can find it. Somebody shared it in Slack for my company. Let me see if I can find it here. Let's see, where would it be? Where would it be? What channel would that be? Let's see, probably interesting ideas, maybe. Yeah, here it was. Let's see if I can find out. Let's see, that wasn't the right link for it. Let's see, where... Let's see if I can find it here. Blah, blah, blah. Man, some people just put a bunch of crap on here. Let's see. Wow. I was looking for it, but I don't see. He put a roadmap, basically. It shows we're going to get large language models, and we're going to go to AI agents. And then the next thing is self-driving cars, which I've kind of been beating the drum that Tesla is about self-driving cars, not about, it's about robot AI. It's got the real application. Large language models, big freaking deal. AI agents, if they actually work and can do things productive, that's great. But as far as usable technology in the AI realm, self-driving cars is probably the big moneymaker. That's things that we all can use. That's, people get paid to drive cars. People don't, it's like, yeah, people get paid to write things, but AI is kind of crap at coming up with new ideas, at least at this point, until it gets smarter than us. So, yeah, I can't find the chart I was looking for. Oh, well. Oh, well. But, so, NVIDIA put out that roadmap, but they're thinking they're the heart of it, but they may not be the heart of it. Like AMD putting out a whole new AI chip system that can run AI models very efficiently. And NVIDIA introducing a new chipset at CES, Consumer Electronics Show, that's going on this week. Introducing a new chipset that can run 200 billion parameter LLMs very efficiently. So, but, how much is demand moving forward on that stuff? Like, to keep the share price going higher, making all-time highs, being the largest company in the world, you've got to keep moving the needle. You can't just sell the same amount. If you sell the same amount, you're going to drop. Like, people are paying for forward earnings growing. And if you're not growing the earnings, if you're just selling the same amount of stuff, just come up with new ideas, selling the same amount, you're not going to maintain this high valuation up here. You're going to drop back down. So I think the valuation on NVIDIA right now is stupid sky high and probably too high. Be careful. Right here. Price to sales over 20 is a danger zone. It always has been, always will be. Price to sales crossing over your price to earnings. Be careful. Be careful. Just to compare, look at Apple, price to sales, 8. NVIDIA, price to sales, 31. Microsoft, price to sales, 12. All right. Generally, we don't keep price to sales over 20. Why do I look at price to sales? You can't fake sales. You can fake earnings, but you can't fake sales. Now, Tesla, This one, 9. Price to sales, 9. And PDE, 71. People are like, oh, price to earnings, crazy. But price to sales, 9. So Google, price to sales, 6. Price to sales, 30 is just kind of ridiculous for a Mag 7 stock. It just, a little crazy. Even Amazon, price to sales, 3. I mean, it's just kind of, things with price to sales over 20 tend to be rapid growth stocks, and arguably Nvidia can't be a rapid growth stock because it takes trillions of dollars to grow it from where it is. There's just not trillions of dollars to flow into it. All right, where does to double the price of cool ad? Where does $3.4 trillion come from to double the price of Nvidia? Where does that money come from? If we print it, that's inflation. If we suck it out of Apple, Microsoft, Alphabet, I say this all the time, but be careful betting on big companies doubling its share price. It's very difficult because it takes a lot of freaking money. It's just not the most likely to happen. GE Veranova probably going to come back down to the roadmap line eventually. Adobe, target's right down here. Getting close now. For all those people that thought I was a little crazy when I said we were probably going down there. Getting close. Qubit, quantum computing. This is probably coming back down to reality. That's probably played out for now. RGTI, probably played out for now. Coming back down to reality. PTIR, watch for that to drop all the way down. That's PLTR, leverage with 2x. Probably coming back to the roadmap line. PANW. Wow, that broke down below the roadmap line. Watch for that to go deeper here. How much deeper? Not really sure at the moment. Watch for support in this area. If we don't get it, may go even deeper. Reddit. Watch for this to retrace to the roadmap line. We don't really have enough candles to do much here. Still in the IPO beginnings. That was only 3 waves up, so be very, very, very careful. We can experience a larger correction. Coin. Still expect this one to come on down. With crypto being soft, I expect that to hit. Potentially even come down to 206 and give us the next opportunity to go higher. SLP. Simulations Plus. Looks like that one's just plummeting out and may go lower. How much lower could she go? Let's see, that high. Could be on a reversal point, 20, maybe a bottom. Looking bigger picture. Load, please. Cool. There we go. And let's see. Wow. Yeah, we could. So that was a giant move up from that low to that high. This thing could come back to 5. Really could. Maybe like no way, but yes way. GPOR. Excuse me. GPOR. That's playing out that move, and we may get a bigger retrace on Gulfport Energy. Remember, drill baby drill is not necessarily bullish for oil. Somewhere back to the roadmap line would be expected after hitting the 1618. Now, if we're going to break on out, 223, 242. RCEL. That one looking like we're going down. 1, 2, 3, 4. That's a setup for a bigger flush. Be careful. That can go to 0. FSLR. Still under the roadmap line. Still bearish inclined. Still hasn't hit my 150-ish target down here. Look at the resistance here. We've found resistance, found resistance, found resistance. One more flush down here, and this could be done. QTM, that's another quantum. Watch for that to come back to at least the roadmap line, if not back to the bottom. Google played out. We hit the target. That can be done. That can come back to the roadmap line. Be careful. Chasing that one. Warrants on Rigetti. That's probably more quantum computer stuff. The W means warrants, and watch out for this to come back down. QBTS, another quantum, probably coming on down. I think I warned everybody these were going to come back down. Hopefully everybody heard me, didn't get sucked into that stuff. Helena Troy, that looks like it's going to make a lower low. That bounced off the roadmap line, bounced off resistance right there. Looks like we're going to go lower than we were right down here. I know, nice and smooth lines. AMD, still looking for this to drop down into the target zone here that I've been looking for over a year. A-Lab, yeah, interesting. Astrolabs at that 150 resistance. May spike it and then get a retrace back down to 81. We don't really have enough candles. Similar to Reddit, hadn't really been around long enough to do much with. This one probably going lower. Bulls probably coming back to the roadmap line. TMDX probably coming on down to this zone. CRDO probably come back down to the roadmap line after playing out the upside. Shell rejecting that roadmap line area. Big red caution. This can come all the way back down. Make a lower low. Be careful. Cold, like I said, that's pushing back down. Over the next coming months, I expect this to rally at least up to the roadmap line. 5. Below. Oh, man. Target's down here. That's resistance. Right there. Oh, moving everything. I don't even know how you move a fib line without touching the handles, but that's resistance. We rallied right up into it, turned down from it. That would be continuation lower, right down in this area. And the bonus trade for the day is RGA, right here. That high, that low. We fired off the entry yesterday, getting a little pullback this morning. That was the conservative entry. And right here, pull this up, flip me over to the other side so you can see, whoops, wrong button. Flip me to the other side so you can see the statistics. 80% there on the historic win rate. Profit factor 2. See the entry right there. Buy, 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 buy. Unlike Jim Cramer, I'm just looking for price patterns that are high probability. The target, probably somewhere up here around 238. And I can actually pull up the actual numbers here. New potential entry. Target is 238.55. Stop below 200. And it closed at 221.74 yesterday with a profit potential of $16.81 on the upside. That's pretty fat. And historic win rate, 80%. And it obviously has more trades in here than the last time I had this. So 30 trades since 1993. We go look at the actual, yeah, it fired off one right there that worked out. Right back there after I did the statistics in May. So those are not live updated statistics. Right there. 31 trades, 80%, profit factor 2. It's pretty smoking. Might be worth it to put a couple bucks on that. See if you can get that 20 bucks upside. That's about a 10%-ish. Almost 10%. And maybe like 8% upside. Now, how long could it last? Could last 31 bars. Could last 62 bars. Remember, bars are not days. They're open market days, but they're not calendar days. So 31 bars takes us out to right there. February, late February. 62 bars, which would be 2 times the average. Takes us 3 months. If you're going to try to play options, 3 months, 93 bars. Actually would take us out to May. And let's see if there's any options available. No options available. At least not on here. So you'd have to play it with shares. Does pay a dividend. Nice, healthy dividend. Looks like that would be about 1.57%. So holding your shares, you could potentially get a couple dividend payments if it takes that long to do. All right, any questions, let me know. Awesome, David. Con eBay, nice. All right. Dun, 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 dun. Wolfens, I pulled the I use a tool that pulls the pre-market, and if it's in the pre-market up at 9 o'clock, it goes on the list. If it's not up or down at 9 o'clock, it doesn't go on the list. I don't rerun the list. I don't add the list. I don't change the list after I run it. I run a tool and grab it, and that's kind of the best way I can do it. So have a great day out there. We'll see you again later. See you again tomorrow. Same bad time, same bad channel. Oh, coming up in 30 minutes. If you want to, you can come join me. I have a, let's see if I can find it. I should throw the link in the chat. If I can find it here. Let's see, it should be pinned. Should be right there. Yeah. I have an urgent briefing coming up at 11 with some big picture targets for this year. If you want to come join me, right here. There's the link. Coming up in 30 minutes. I'll be live. So have a great day.